Against? That's carried.
Great, thank you very much.
Thank you.
All right, so now moving to the corporate finance report. Thank you. And again, let's just take the report as read. Just any headline comments or updates from staff?
Yeah, good morning, councillors. The only comments would be this is a combined report of the financial performance and treasury rates and interest. So this will be a combined report going forward on a quarterly basis, probably with a slimmer monthly update on financials. The other comments, we've included some key financial statistics at the request of a GM. Happy to receive any feedback on that at any time outside this meeting in terms of what's missing or what more or less you might like. Key financial highlights, 4.3 financial surplus forecast for this year at 11.7. It's been around that level for the last 3 or 4 months, so it's fairly stable. End of January update, it's dropped to 11.3. We've altered our COVID assumptions and we're now forecasting red through to the end of June, so we're just being a little bit more conservative there than we were. Under 4.4, COVID costs to date 4.6, update for January 5.4 million forecast COVID impact, largely revenue loss through facilities and parking and enforcement. Other than that, capital program, as we know, running slightly behind. Forecast borrowing, probably in the ballpark of 100 million less than we'd planned. We've baked 50 million of that into the draft LT annual plan, which you'll talk about this afternoon. Highlight under Treasury 8.1, Standard & Poor's annual review. So we had an improvement in our outlook from stable to positive. So that's very good news. Only one of 2 local authorities out of the 50 that Standard & Poor's look at in New Zealand. I think there may have been 7 that had a deterioration and the other 40-ish were the same. So that's very positive news. We've got our Group Treasurer, Steve Ballard, here if you want a 30-second update on the OCR announcement yesterday.
That would be good, thanks. Please.
Right, okay. I'll try and do it 30 seconds. That's not my natural tendency. You've probably all heard the headlines. The official cash rate did go up from 0.75 to 1, which was very much as expected. I think the more important key takeout is the forward track and the thinking around it. The message is very clear that the Reserve Bank is very concerned about inflation. The inflation projections, we're probably living through the peak of it now, but the projections that they're putting out are very much steeper over the next 12 months than was previously expected. And as a result, they're putting up their forward track for interest rates, and the peak of what they imagine the official cash rate will get to is now around about 3.25 compared with about 2.5 last time they came out to us a few months ago now in November. Most of this is actually as expected. It was a little more aggressive than the markets generally expected, but not very much so. And the balances now, I think, are quite well, the balance of risks is quite well balanced, if that's not a bit tortuous. The key risk to them is wage inflation. Unemployment's very low and likely to go lower before it goes higher again. But on the other hand, you've got obviously COVID temporarily, but you've got the housing market, which has already started to turn. And will be affected by interest rates very much so over the next 12 months. So those 2 competing factors will guide them as they try and get us through the next 12 months or so. In terms of our planning for next financial year, there is some risk of upside still, as there was in November, but at the moment we're not making current changes to our plans. We'll keep looking at it over the next few months to try and see where that balance of risk evolves. The Reserve Bank, importantly, I think, is still picking inflation for our financial year 23 to be back close to that 2.5%, a fraction higher than they previously thought, but it's still close to that 2.5%. And they're still picking a neutral cash rate to be more or less that 2%, which is what it was before. So what they've done is they've brought their tightening forward more aggressively to cope with the immediate inflation problem and try and maintain that credibility around inflation fighting, which is hard won and easily lost. So that's why they're doing it so aggressively. So at this stage, balance of risk is still close, and we're still looking at it carefully to see what impact, if any, it has on our plans.
Thanks, Steve. In terms of the balance of the report, rates collection is fine, well on target, under 9.4, there's a graph there that shows that. In terms of insurance, 11.1, the trickling filter, I believe there's a report in the next few weeks coming to the insurance subcommittee on that. Otherwise, that's it. If there are questions.
All right, so happy to move to questions now.
Yes.
So I've got Phil and then Pauline. Phil.
Thank you very much. With the interest rates, what's the impact with the interest rate going up by that 0.25% or whatever on the money that we've got borrowed? What will that roughly equate to? How much extra money we have to pay back in interest for a year?
Not an awful lot, actually. Our borrowing, a lot of it is fixed. About 80% of it is currently fixed, and probably 70% or so, or more, of our current borrowings goes out for at least 5 years. So the immediate impact's not very great. The floating portion of it is on 90-day bills rather than the official cash rate, and the 90-day bills have been going up slowly over the last 2 or 3 months anyway. Okay. So the bills probably only, I haven't seen it this morning, obviously, 'cause I've been in here, but it's probably only going to go up by about 0.1%.
Okay, that's good.
So muted.
Thank you. Pauline.
Oh yes, great. Mine was on the trickling, the wastewater treatment plant. So the initial payment from the insurance company, interim I'd say you'd call it, of 10 million. Has that been enough to cover what we've done there to mitigate to date? Do you know? It has been. And to continue mitigating? Right, thank you.
All right, any further questions? All right, so I'm happy to move that we receive the information in the report. Sarah will second. Any discussion? All those in favour say aye.
Aye.
Against? As carried. Thank you.